Happy Chinese New Year. This is Gabriel Yap, your REITs guru. Just before Chinese New Year, there was a group of disgruntled shareholders at Sabana REIT. Yes, Sabana REIT. They are calling for the removal of the REIT manager. Now, if they are successful, this is the first time in the local REIT history in Singapore that such thing is actually happening. Now, do they actually have a valid reason for calling for this removal? Why are these shareholders disgruntled? Now, just look at the performance of Sabana REIT. It is quite clear for the last 3 years, the NPI on a quarterly basis has fallen from 19.9 million to 13.9 million as of the last quarter, fourth quarter 2016. If you look at the DPU, that's the returns that shareholders get if they cap the REITs, just receiving the quarterly dividend. And that's the basis if you are a long-term investor just holding the returns. You will notice that that has fallen from 9.38 cents in FY 2013 to only 4.17 cents in 2016. This represents a drop of more than 50% in the last 4 years. So again, ladies and gentlemen, if you look at the NAV of the share now, the latest NAV is 74 cents, but the share price is only 37 cents. That's a 50% drop. This means that Sabana REIT is trading at a price book value of 0.5 only. Doesn't mean it's actually undervalued, or does the undervaluation means that it is not well managed, as what these disgruntled shareholders have actually alleged. For a deeper understanding, do look at my upcoming 11th of March 2017 REIT class. Do sign up at Eventbrite or just email me gabrielup17@gmail.com. Now, Sabana REIT management was actually quite quick in actually responding to the Straits Times, and it came out with a statement. It says that, look, as disclosed in the IPO prospectus, master leases were under triple net master leases. They started to expire on the fourth quarter of 2013, which meant that from 2014 they started to go down. But you know what? In the latest statement, Sabana continues to actually agree that the non-renewal of master leases continue to pose a problem to the positive rental reversions. Now, the key thing, therefore, that one needs to ask is, why is it that Sabana management wasn't able to anticipate this, even though it was disclosed within the IPO prospectus, as they have already said, before the triple net leases come up for renewal? Why do not they undertake forward renewals and thereby avoid this kind of situations? I think most forward management would be looking at this course. And the other thing is that the other grounds that the other shareholders have is the fact that they proposed or had proposed to acquire the 3 number of properties in Eunos, and that's for a huge amount, 77.5 million. They went to the market to raise rights issue. Now, how do you value the rights issue? Now, this is something I'll teach in my course on the 11th of March. How do you know the rights issue are basically at a good price, and favorable to shareholders? Now, if you look again at the statement from Sabana REIT management, they say that, look, it is a good opportunity for them to acquire 3 strategic located quality assets in Singapore, and blah, blah, blah. But the key thing, ladies and gentlemen, as pointed out by some of the minority shareholders, is that why are they acquiring this property, one of the 3 that's at, say, Eunos, for 23 million? When the sponsor, the same property that they are buying from the sponsor the previous year, it was sitting on their balance sheet at less than 10 million. So do you buy 3 million, pay 23 million, to acquire something that's only 9.5 million? It's an interesting question. In our class on the 11th of March, we will be looking deep into this kind of scenarios. We'll also be looking at why, thankfully, I was able to sell my Sabana shares before the share price plunge. Of course, taking into account that, the 3 years of dividend I've received, plus the selling